Hello everyone, I'm your lecturer Dr. Abdulfur. Today we will be discussing our first topic, that is Introduction to Corporate Finance. Okay, before we discuss our topic in detail, we need to understand the mind mapping first. So before I discuss this mind map, you should understand that when someone makes a decision, so in the decision, we normally look at two aspects largely. What are the benefits of my decision? What would be the cost? So if it means that I'm evaluating my decision, right? So if my benefits are greater than the cost, so it means that my decision is good. If my cost is greater than benefit, decision is not good. So when I compare my benefits versus cost, so this is called evaluation. Okay, so this evaluate, and if let's say the decisions are financial decision, so decision could be any decision, right? So this evaluation takes different forms. So if it is a financial decision, benefits would also be financial benefits. What would be the cost would also be the financial cost. Okay, so it means if it's a financial decision, someone is going to do financial evaluation, means benefits and cost. If the person who is making this decision is an individual, so we call it as personal finance, right? So let's say as an employee, I'm worried about my post announcement investments. So what do I do? I'm thinking that if I invest today, what will happen after 20 years when I retire? So what would be the benefits that I will be getting, and how much should I invest now? So if I'm investing anything right now, it means I'm not using, so that would be an opportunity cost that I'm doing that. Okay, so it means that if a person is doing the evaluation at an individual level, it means he is also evaluating its benefits as well as costs, so that he can make an informed decision. So it means that financial decision could also be made by a company, right? So when a company makes some financial decisions, companies, they also do benefits as well as cost of those financial decisions. So it means that companies are doing evaluation of the financial decision. So we call it as corporate finance. Okay, so corporate finance means the evaluation of the financial decision. So if I ask you what is the definition of corporate finance, you will say it is the evaluation of the corporate financial decision. Okay, so that's why if you see in this box, I have written valuation of financial decision. In finance, we specifically called this evaluation as valuation. Okay, so we call it as valuation. So it means that to make a good decision, a manager has to make a good financial decision. To make a good financial decision, the manager should know the comparison of benefits versus cost. Okay, so it means it has two parts, A part and B part, we should know. In the A section, what is this valuation cost benefit analysis? So it means that if we understand the cost benefit analysis, we can make a good decision. So to make a good decision, we should first understand this evaluation, and to understand that, we should learn what are the principles. Okay, once we understand the principles, in the principles we will teach you how to make cost and benefit analysis and calculate the present value, time value of money. All of those factors will be considered. Okay, so in the principles we will spend financial mathematics 1, and we will study financial mathematics 1 and 2, and we are going to spend week 2 and 3. So through these 2 weeks we will learn some basics of valuation. So once we understand the valuation, then we will talk about the application. So okay, now we have learned the valuation, so now what to do? We need to apply. Okay, so in the application could be done on the financial assets as well as on the real assets. The financial assets are the assets that are used to generate some funds. Okay, financial funds. So for instance, bonds and stocks, these are called financial assets. So if I, as an investor, I am buying a stock or bond, so it means that I need to do the valuation for the bond. Also, I need to do the valuation of stock based on the principles that I have learned. Okay, so it means these evaluation principles, they teach you how to evaluate or do the valuation of the decision. Why? So that an individual can make a good decision. Okay, from a corporate perspective, since these bonds and stocks are issued, so come from corporate perspectives, the companies are also doing these valuations so that they can do they can share issue they can share stocks as well as bonds. So it means we will learn the financial assets, application of the valuation principles on the financial assets, but these are not very important, or I mean they are important, but the best side of the corporate finance lies at B part. I mean the scope of the corporate finance is this one. So this is just the fundamental that you should understand. Okay, next we will spend week 4 on bond and stock valuation. Once we understand that, then we will also do the application on the real assets. Real assets are the assets that generate sales. Okay, so for instance a machine or a land or some plant. So these are the real assets. When companies they invest in the real assets, company is expecting to increase their sales, company is expecting to increase their production, right? So we will learn these principles on the real assets, and that comes under the investment decision. Okay, as we can see, it means that the companies they are going to make investment decision, and investment decision in what assets? Real assets. So it means if you see here application on the real assets are invested by the company, so that's why you can see there are double arrows here. Okay, so we are going to spend 2 weeks to understand the investment decision, or in other words application in the real assets, that is investment decision rule week 5 and fundamentals of capital budgeting in week 6. I mean, these weeks will help us to understand the application of valuation principle on the real assets, or in other words, we will learn how to make investment decision. The next decision that the company, if we talk about the right side now, so if you see there are 3 decisions largely that the companies they make. Okay, so they are investment decision, financing decision, and dividend payout. Investment decision we already discussed. Financing decision are the decision to borrow funds or to generate funds from capital market as well as from some private markets. Okay, so to fully understand this financing, we will spend 2 weeks: cost of capital week 8 and capital structure in week 10. Okay, and then there is a another third decision, that is a dividend payout decision. Sorry, dividend payout decision, we will spend week 11 on this particular decision. So it means that a finance manager, a company, is going to evaluate 3 types of decision largely. Number 1, investment. Number 2, financing. Number 3, dividends. So these 3 decisions are the building blocks of corporate finance. So manager in these companies is supposed to evaluate these decisions so that companies' wealth increases. Okay, so now if you see there are a few weeks that are skipped: week 7, week 9, and week 12. In week 7, I have written that these are supplementary topics. So it means that once we understand the valuation of application of the valuation on the financial assets, so we can further study risk and return of those financial assets. Okay, so that's why I have called it as supplementary topic. And if you see this supplementary topic, so when we will be investing in the stock for instance, so there is a risk and return trade-off in the stock. So that's why this topic is complementary to bond and stock valuation, right? So same risk can be used in other investments which involve some risk. So that's why if you see risk and return, it is a supplementary topic to the application on in the financial assets. Okay, and also this is also helpful. This topic is also helpful when we are doing cost of capital thing, and it provides a very key input. So these are actually the supplementary topics that are helpful for the financial assets application, as well as these are very helpful in calculating the cost of equity capital when we will be studying this topic. Okay, so it means it is supplementary to this topic, it is supplementary to other topics as well. Okay, all of these topics. And dividend payout also, we are going to do the application of these particular models that we will be using here. Okay, and then we have also a working capital management. Working capital management is also a supplementary topic, though this is another particular decision that finance manager has to make. But since largely it comes in the short-term investment, short-term decisions, we have not included it in this category. So these are the long-term decision, and this is a short-term decision. So that's why it is not. Corporate finance is largely for the long-term decision. Okay, and working capital will provide us some input in these topics. Okay, so you will see that working capital will be helpful in giving us input. So it will give us some input when we will be evaluating our investment decisions. Okay, and then there is an extra topic that we have recently introduced is ESG investing and some other topics, depending upon the new wave of the topics that is being coming out. So we will discuss any other topic, so we always specify it for that.